everyone, Joselyne Muszynski here with Orlando International Relocation Realty, and we are back. Last week we went over one of the 3 things you should do to be financially ready for home purchase, and today we are covering the second option. So last week we spoke about your credit score being one of the main factors in being financially ready to buy a home. And so today we will be talking about the down payment, which is the second part of being financially ready. So the down payment, where can you buy a house with little to zero money down? The short answer is yes. You can buy a house with no money or very little down payment. However, you may not want to do that. We will be talking about why you may not want to do that and how that will affect you. So ideally, credit score and down payment are the 2 significant factors that will affect your mortgage. So a good credit score puts you halfway down. So ideally, you want to have at least 20% down payment is a good one to put you that second halfway there. And so in other words, if you're buying each month and you'll be paying private mortgage insurance, which is an extra expense each month. So, that is an option that you can do. It's not as ideal, but it's there. So that's an option. But also, if you have only 20% savings in your bank, and that's all the money you have, it's also not a good idea to put that 20% down. Either save a little bit more before you can purchase and just wait a little bit longer, or if you can afford it every month, then just put less down and pay more every month. Because if 20% is all you have saved up, I would not recommend using all of that, because on top of that you will need several thousands for closing costs. And most people that buy homes, there are some repairs that you may have to do right away. What if you buy a home and, I don't know, a week later your air condition shuts down, which happens a lot in Florida, by the way. So if your air condition shuts down, that's a big expense that you're gonna have to come up with right away. If that's all you have, save a little bit more for the extra expenses on top of the down payment, and then wait a little bit longer until you have that buffer that will help you be able to do some repairs on the home you purchase and also have extra for the closing cost. Your mortgage company should give you an idea of what your closing cost should look like. It's usually called a good faith estimate, or GFE, and also usually give you an idea of what your monthly payment may look like. So those are some really, really good tips on being financially ready to purchase. Another thing that we're gonna be talking about next week, the last of this series, will be your mortgage payment, your monthly mortgage payment, which most people don't think about when they are right there, but it is very important to know what your monthly mortgage payment will look like and can you afford it. Obviously, everybody wants low interest rate and low monthly payment, and that's why that credit score and that down payment, that 20% down payment, is very important if you can afford it. That will give you low monthly payment, and we'll talk about that next week. So stay tuned, tune in next week. Be sure to subscribe so you can get notified when we post the video or when we're posting the video next week. And be sure to comment below, like, and share if you appreciate this video. Thank you so much for watching, and see you next week.